What's up guys? In this video, I wanted to give you a portfolio update as well as go over my strategy for the upcoming alt season. I usually do this update every month. You guys can check the playlist. A little bit late for July because I've been traveling, but the plan is to look at my portfolio in depth, share a few tips along the way, as well as my market outlook and my plan for the next coming few months. So hopefully you can learn from my mistakes or get a new insight on anything new that I've learned. In my opinion, the bull market is probably coming to an end in the next 6 to 12 months. So if you guys want to know my strategy for the next 6 to 12 months, then stay tuned for the video. Hopefully it helps you form your own plans as well. And like always, this is not financial advice. So here, if you guys see, my portfolio is pretty heavy in Ethereum, but very recently my ETH value of the portfolio dropped quite a little bit. We'll take a little bit of a deeper dive on why, but that's not a big deal because you can see the US dollar value of my portfolio is shooting up, as well as the Bitcoin value of my portfolio. I really like to track this, and I'm outperforming Solana pretty comfortably here as well. So not doing too bad. Some positions are struggling a little bit. That's why you see a downtrend in ETH value. Haven't really on-ramped or off-ramped anything these few months. And you can see in July, I've collected over $5,800 in fees. So still doing pretty good. Not really trying to optimize for APR at the moment. I'm trying to aim for more capital appreciation because I do expect the market to move up pretty aggressively in the next 6 to 12 months. So I updated this yesterday. Ethereum has moved up in price a little bit, so the portfolio value would be a little bit higher right now. And here you can see my overall portfolio is still pretty heavy in Ethereum, 29.2% worth of Ethereum, still holding on to a lot of NFTs here. The prices in Ethereum terms have been largely flat, so I haven't been updating it. I'm still waiting for a catalyst, but you can see about more than half of my portfolio is in Ethereum, either in NFTs or just Ethereum paired in liquidity pools. The major difference this month is I'm starting to add more and more stablecoins. A lot of them are still in liquidity pools encrypted to stable pools like USDC here, 4.9%. And if you add my other crypto to stable pools like Pengu to USDC and Hype to USDT, it would add to roughly 7 to 8% of my portfolio. My goal for the alt season is to slowly increase my stablecoin allocation, maybe to 50 to 75%. By the time altcoins really are overheated. And the main reason why my portfolio is down in ETH value is because some of the mid and small cap tokens are kind of underperforming Ethereum a little bit. Ethereum has been really strong in the last couple of months. And you can see I've acquired more Pixel here, increased my holding by 17% because a lot of it is in liquidity pools. As Pixel underperforms Ethereum, a lot of my Ethereum got converted to Pixel, right? And this is completely fine if I'm bullish on the asset, which I am. Still waiting on a catalyst for this specific token. But you can see even though the holdings increase in terms of the number of tokens, it has actually decreased about 4.6% of my overall portfolio because the value of the token dropped slightly while other tokens are rising up, right? But not doing too shabby, up about 37% in US dollar value and 26% in Bitcoin terms. Because I already hold a lot of Ethereum, I'm actually trying to optimize for more US dollar profit and Bitcoin profit here in the next coming months. So even though I still want to try to beat Ethereum in terms of my altcoin performance, it's not a big deal if it doesn't happen because we aim for the target, but doesn't mean that we're always going to reach there, right? We never know what's going to happen in the crypto markets. If I suffer losses, you guys would be the first to know. I do close some positions in a loss from time to time. It's very normal if you guys are running a mid to high risk portfolio like I am, where we're pairing a lot of altcoins with Ethereum or altcoins with Solana. And here you can see the overall breakdown of my liquidity pools. I'm in Ethereum to USDC, Pixel to ETH here. I've actually closed one of the position to hold just the Pixel to get more asset appreciation if the catalyst for Pixel drops in the next coming 3 to 4 months. I've shared Pixel a few times on my channel. It's just a very small cap gaming token that I'm bullish on. It's launched by an NFT collection called Sappy Seals. And right now, one of the main upcoming catalysts is Omnia, which is a pet battler similar to Pokemon or Digimon. You can see there have been some updates to the pet designs as well as some gaming footage. But because the game is not out yet, there's still a lot of uncertainty and the price is just bleeding out a little bit right now. Bonk is still doing pretty well. I'm still up on that in Ethereum terms. So is Pendle and Mog. Still hold a pretty significant percentage here, 14% of my yield farming portfolio in Bonk, 8% in Pendle, 5% in Mog, and then a few smaller positions here like Syrup, about almost 4%. Basis for Everyone, which is a content coin that's launched by Coinbase on a platform called Zora, about 4%, and some other small caps like Clanker and Vader, as well as Pengu and USDC. And I forgot to add Hype and USDT here. When I last updated it is around 3440. And I can just put a conservative 25% APR. So you guys can see compared to last month, I was mainly in crypto to crypto pools. I also had a leveraged Ethereum position that I closed out for roughly $1,000 profit only. You can see this is that bull lever position here and transition to more crypto to stable pool like this ETH to USDC. Again, Pengu to USDC and Hype to USDT. If we add that up, it's roughly 36% of my yield farming portfolio. And this is typically what I like to do as the market drifts upward. Because these pools are less volatile, I still have some upside. The cash flow is really good and I'm selling my assets on the uptrend, right? Versus being fully in crypto to crypto pools, my asset appreciation would probably be greater, but the drawdown is also greater as well. So that's the one component of my strategy heading to altcoin season, is shifting more and more from crypto to crypto pools to crypto to stable pools. If I still want to have some market exposure, but less than a 100% exposure. And I will most likely add like stable coins on the side that I also lend out so that I don't have a market risk as well. So that's pretty much it for the portfolio update. Still doing pretty good in terms of like the fees collected. My portfolio is not dropping too hard in Ethereum terms. Again, it's mainly because of Pixel because that's a pretty big part of my portfolio. Not a big deal because I do expect the catalyst to come in play in the next 3 to 6 months. And if Pixel does give me like a 10 to 20x at least, then my portfolio would also grow by a huge amount as well. So let's take a look at the market here. You guys can see Ethereum has been really strong recently. If you guys have been following me for the last couple of months, you guys would know that I have been trying my best to accumulate more Ethereum, either through just straight out buying Ethereum or with crypto to crypto pools, so that when Ethereum's price shoot upwards, I could take more and more Ethereum profits, right? And this is exactly what I want to do heading into altcoin season. If we look at the Ethereum monthly chart here, it still looks really good. And the reason why I pulled up Ethereum first is because, in my opinion, it's the most important factor on when we're going to see altcoin season. You can see there's a MACD cross here, which is a momentum indicator, and hopefully it draws a big peak, which means that the price would need to move pretty aggressively upwards, right? The RSI on the monthly chart is still looking really good. I use the 25 period RSI because I'm more of a mid to long-term investor. I don't want too much noise here. I would be a little bit more concerned if the monthly RSI is peaking out at, let's say, 75 to 80 here, or even 70. So in momentum terms, I don't think we're near a top. But at the same time, we never know the future. A black swan event could be just around the corner, and then the whole market just goes nuking down, right? But Ethereum here is at a really good price. I'm starting to take profits on my Ethereum. That's why I have some crypto to stable pools. And as Ethereum moves upwards in price, I would be even more aggressive when it comes to taking profits. Bitcoin is still holding up through its breakout. Hopefully it breaks higher. And I think if Bitcoin and Ethereum moves higher, the odds of a really big altcoin season that's around the corner is going to be higher and higher. So everything is looking good here. Let's take a look at Bitcoin dominance. You can see on the monthly chart, we're starting to see a MACD cross here that is potentially signaling like the move downwards. If we drop to the weekly chart, The red line is the false breakdown that we saw last cycle and what we saw a couple months back before. If I overlay it with Ethereum price, I would argue that the false breakdown occurred because Ethereum was not able to break its high. You can see back here, Ethereum price was trading around $400. And then when Bitcoin's dominance started to really break down is after this green vertical line here, where Ethereum starts to break new highs, right? When Ethereum sets a new high, Bitcoin dominance would drop down pretty sharp. And this makes logical sense, right? If you guys think about it, Ethereum is like the second largest crypto. If Ethereum is outperforming Bitcoin by a large amount, then Bitcoin dominance would drop as well. And a lot of people use Bitcoin dominance as a signal to go long on altcoins. A lot of people are already positioned in altcoins like I am, which I personally do believe is a better strategy rather than trying to wait for like a confirmation of a altcoin season. Let's say dominance drops to like 57% and then there's a confirmed breakdown. Then you're going long on altcoins. I think you're a little bit later on the move. You could still try to do that. But in my opinion, if we believe that altcoin season is coming up in the next 6 to 12 months, then I'm completely fine yield farming altcoins, accumulating more altcoins, and then hopefully I could sell more of those altcoins either into Bitcoin, Ethereum, or stablecoin as the market gets overheated. But compared to last year, the retail interest is not really here yet. The Ethereum pump is mainly driven by institutions, and I expect the move to still continue upwards for the next couple of months. If we drop the Bitcoin dominance chart to the daily chart as well, you can see this has been like a bear flag pattern that is breaking down. And it's at this crucial 60% mark here. I'm watching this closely, as well as this 57% mark. But if I had to put odds on it, I think in the next 6 to 12 months, altcoins are likely to trade higher than where it is right now. If we look at the stock market as well, the S&P 500 has been really strong. You can see this SPY here actually kind of like bounce off of this previous high near that zone and is still trying to break new highs, right? So this is looking really good on large cap stocks. And if we look at the Russell 2000, which is made up of smaller companies, is still lagging behind a little bit, similar to how mid to small cap altcoins are lagging behind. It would be a really bullish sign if this index is able to beat its previous high and still continue to move upwards. So my rough game plan for the next coming 6 to 12 months is to basically sit on the hands that I have already. I think the prices are trading near like the middle of the zone, where the risk and reward of buying now is not as great as where it was a few months ago. So if you're not positioned already, you could still try to look for buying opportunities for the upcoming altcoin season, but I'm pretty happy with what I hold. Stuff like Bonk, Pixel, Mog, Basis for Everyone, Syrup. Some of these are high risk, but my plan is to just sit on these hands here, even though some of them are at a loss, like this Pixel to ETH pool is showing an Ethereum loss, right? But it's not a big deal because I've been de-risking out of these positions, right? Which is the second part of my strategy is to sell the fees either into Bitcoin, Ethereum, or stablecoin. I'm already pretty heavy in Ethereum, so mainly Bitcoin and stablecoins for me for the next coming 6 to 12 months. Ideally bumping up that stablecoin allocation to at least 50% when I believe that the market is near its top and the risk and reward for holding longer, it just doesn't make sense, then I would reduce a lot of my crypto holdings, right? But for now, sitting on my hands, de-risking with my fees, rather than using the bulk of my fees to basically reinvest into new positions, I want to take some risk off the table as the prices move upwards. The third thing I would start looking to do is I would exit some of my positions for a profit. For example, Bonk is still sitting in a nice profit. You can see sometimes some of these trackers are not very accurate depending on what you do. For example, if I withdraw right now and then just hold my Bonk as Bonk outpaces Ethereum, and then I sell my spot Bonk for a profit, it's not going to show up in this tracker here, right? So the most accurate way is to actually use like a tracking sheet. I'm still updating this sheet. I'll try to share this with you guys once it's ready. I believe there's like an older version of this in the description. You can check that out. but I will put out a new version in the next few months when it's ready. But as you can see, Bonk is still in nice profit, 1.9 profit on the rebalance position. The open position is sitting at 0.227 ETH loss, right? So if the market is really overheated, Bitcoin dominance is really low, stable dominance is really low, and a lot of euphoria is in the market, I will be looking to exit a lot of my positions either for a profit or even for a loss if I want to realize my overall profit and then shift my strategy a little bit to prepare for a sharper drawdown, right? The fourth part of my plan is to control my risk and don't take too much risk. Last year, one of my bigger mistakes is just making a ton of money from fees and then just using a lot of those fees to reinvest into other newer positions, trying to make more gains, right? But the problem with that is if the market pulls back really hard and you're not managing your risk, then your portfolio would drop pretty sharply as well, right? So risk management is like my own key focus here in 2025, especially if the prices keeps drifting upwards. Right now, my portfolio is still near like the high risk point. When I sell my fees, my risk would drop, right? And then I would close some of my positions. As the market keeps trending up, my risk would drop further and further until I'm at a fairly low risk portfolio. So that's my risk management strategy here. When the market drifts higher, I want to basically decrease my risk. And then when the market is looking really bad, everyone is capitulating, selling their holdings. I want to basically ramp up my risk once again and then hop back to the other side, right? I call this risk hopping and it has worked out really well for me in the last year or two. And one very simple way to dial down the risk, again, is to shift from like more crypto to crypto pools to crypto to stable pools like I currently am, right? If the market moves up even more aggressive, I would add even more crypto to stable allocation if I want some more upside or add stable coins on the side to basically hedge my bets. And that's the last part of my plan here. Again, my plan is to increase my stablecoin holdings. As you can see, my stablecoin is roughly about 4.9% plus some crypto to stable pools here. So roughly only 7 to 8% of my total portfolio. Every single month, I want to be selling my fees, hopefully bumping that up to 50% over time, especially when the topping signals are flashing. So that's my game plan here. There's 5 things, right? The first is to basically sit on my hands. Sometimes the performance of a particular token would fluctuate by a lot. Like this Pixel token here, it's not a big deal if I believe the price would go up in the future. So I'm just sitting on my hands. I did all I could. I controlled my risk. I did my research. I'm very comfortable with what I hold. And if I'm not, I could rotate into other investment, right? The second thing is I will be selling my fees more aggressively to de-risk, either into Bitcoin, Ethereum to stablecoins. The third is to start exiting some of my positions for a profit, especially if the opportunity comes. I will be more and more aggressive in terms of taking profits as the bull market extends. The fourth is to control my risk, making sure that I don't take too much risk so that I could actually realize the profits and then retain the value of my portfolio if the market draws down really hard. And lastly, I want to increase my stablecoin allocation just so that I'm making sure that I'm securing my profits and not watching my whole portfolio draw back down if the altcoin season comes and then goes, right? So hopefully those tips help you guys out. If you guys want to learn more about yield farming and how I've been able to accumulate more and more crypto while generating a really nice passive income with my holdings, then be sure to check out the other videos on my channel. And you guys could check out the other portfolio update videos as well if you guys want to take a look at my performance over time. Thanks once again for watching. I'll catch you guys next time.